What's up, everybody? It's Rob Cosman from sellingfromthebeach.com. Today, we're doing something a little different. Not, well, maybe there's a little bit of accounting, but today's video, I'm doing 9 common seller mistakes. I guarantee there's way more than 9. I make them, everybody makes them, but I'm going to go through 9 of them today as an example. Hopefully, bring them to light. Maybe you do them and you don't even realize it, but I'm going to bring them up. Talk about what the problems are I see people making, including myself, and how to fix it. And this isn't necessarily for new sellers. It is quite often that's who makes these type of mistakes, but it's even for experienced sellers like myself. Sometimes we fall back into these traps and we make them too. So hopefully this video will help you think about some of your business, how to make it better, make it more profitable, and avoid some of these mistakes along the way. Also, I'm going to put a link below for my free course. If you're new to Amazon FBA, I've got a link below. I've loaded it with a bunch of videos, how-to, some more details on some of these sales tax settings we might talk about, but I've got videos all in there and some other free PDFs and whatnot. And also a link below to grab my book. You can get it on Amazon or you can get it directly from me, but that's an amazing resource if you're new to the game and you just, especially when you've got something physical in your hand, you flip through it. It definitely helps a bit, I think. Okay. Number 1, not understanding if you're making money. In this business, you can spend lots of money. It's real easy to buy more stuff. Okay. We keep doing that every day. I can buy things. And obviously, the more we purchase, the more we can grow our business as long as the items sell. But if you don't know if you're making money, then what is the point of doing it, first of all? And second of all, if you don't know, then you don't know what you're doing good or what you're doing bad, and if you should continue to do it. I see a lot of people when they first start out and they're just using an Excel sheet or something to track their purchases, or they're not. That's fine. Great. You can start like that, but you need to understand if you're making money. And there's a difference between money and cash flow. So cash flow, if you're in this business and you're buying a lot and you're growing a lot, your cash flow is going to suck, because what you're going to do, hopefully, is you get excited, you buy stuff, you send it into sell. You keep buying more stuff and you're buying more stuff and more stuff. And it all doesn't sell instantly. You start to build up that inventory. But if you buy $50,000 worth of stuff, you're not going to sell $50,000 worth immediately, and then you've got to pay that credit card off. So that's how the cash flow kind of comes in. That's why you need to slowly start, making profitable purchases and sales, and then rolling that cash back over. So I see a lot of people that really just have no idea. They kind of wait till the end of the year and be like, okay, here's my books and records and all my receipts, and did I make any money on it? What does it look like? Or they have a bit of an idea, or they know that when they made these purchases, it seemed good and what they could sell for, but what did the item actually sell for when you finally did sell it versus when you looked at it and scanned it and said, okay, am I going to make that purchase, right? The other thing I see is people trying to force QuickBooks to show them their profits. I'm a massive fan of QuickBooks Online. But of course, QuickBooks Online is more for your taxes and accounting and, that kind of overall reporting to the government kind of thing, right? It's not meant for management analysis, and people try to force it to do proper management analysis, which is looking at each individual item. Is it selling? It's difficult. Like if you're an RA or an OA or wholesale, and anybody who's got a lot of different SKUs, one of the problems is trying to estimate what your ending inventory is, because the inventory is an asset until it's actually sold, and that's when it goes through in your P&L and you figure out if you made money or not. And a lot of people try to force QuickBooks to do that. But I mean, if you miscount things and you don't have your in transit, let's say, inventory that you just bought from Walmart, and you recorded that payable, that amount came out, but you don't have that inventory counted, and that's $1,000, that'll throw the calculations off. Like, it can get messy and it's difficult. So trying to make QuickBooks do that is, I'm not a fan. That's why I look for a management software or something else to do that. But the amount of people that don't, and they tend to cheap out because they don't want to get a software, or they don't want to look at it, and sometimes it's hard truths. People just don't want to do it. So the solution, I use Sellerboard. So Sellerboard is a little software. You got to pay for it. Super duper cheap. I'll put a link below where you get 2 months free trial. Won't cost you anything. 2 months. Try it out. What you do is you put in your cost of items and it syncs up with Amazon and it calculates everything like daily, as soon as stuff happens, daily, weekly, monthly, whatever. Here's your orders, here's your costs, here's your advertising costs, and here's your profit for the day. This is so important because it forces you to get granular, to look at your costs of returns, to look at the fees that, you're paying Amazon, storage fees, to look at your actual sales and figure out, okay, how much money did I really make this month, this week, this year? Because if you're continuing to grow and buy more, you're always going to feel cash flow poor because you're going to pay off the credit card. You continue to buy more unless you actually stop and take a pause and sell through stuff, or you're only purchasing with money that's coming back from payments. Then, okay, fine. But most of the time, you're just going to be always chasing more cash flow, right? So this is so important to make sure that daily and weekly you're looking at this saying, okay, are the items I'm selling profitable? Am I turning it over? In the end of the day, are my profits worth the effort? Like you can be profitable, but your ROI might not be there. Like I've seen people in the, what's your margin? What's your ROI? And they don't know. If your margin's only like 10%, you'd sell $1 million and, just like, what's the point? Great. You sold $1 million at 10% or you sold $500,000 at 20%, which is better? They're both end up being the same. I'd rather sell less items and make more as a percentage because it means I had to touch less inventory, I had to manage less stuff, less cash flow, all that jazz, right? So people don't want, for whatever reason, and especially new sellers, don't want to do this. And it's so important, especially early on. Like, hey, if you're seasoned and when you're buying stuff and you're making money, great, fine, fill your boots. But still, looking at these statistics and the numbers, just don't pass it over. That's why I use Seller Legend. Brings on it's not Seller Legend. I use Seller Board. I used to use Seller Legend, but I didn't like the interface as much, so I kind of switched over to Seller Board. See, I talked about it once. I tried 2 different things. Seller Board's the one I like. So I use Seller Board, and this is what I see. And this is just a nice interface, easy for me to click through and see what happened during the week. The only thing that I will caution is if you look at the daily and you start getting refunds, they don't calculate the cost of that item coming back to inventory yet. So you want to look at it on a monthly basis, let's say, because then they will have received the inventory back and determine if it's saleable or not, and then allocate the refund cost. So when you get a bunch of refunds on one day like this one, I got 2 refunds. If each one of those items was like $100, they take $100 straight off my net profit. So that kind of skews things a little bit when you're looking at it daily, but it averages out when you kind of look at it monthly because then the goods come back. But then you're also evaluating, okay, what are the returns that I'm getting back? What percentage is saleable? That type of thing. Okay. That's number 1. I spent a little bit of time on that, but super duper important. Number 2, selling low value priced items. This is psychological in your head. This is a thing I find that some people just, especially newer sellers, they would rather sell, let's say 5 $20 items than $100 item. The fear of that $100 item coming back as a returned and damaged, they don't like that. So they would rather buy the $20 item. But if everything else holds true, if you're making the same ROI, I would way rather sell a $100 item because it's one item to touch, one item to prep, and one item to worry about, than having to sell 5 $20 items, more prep, more items to touch, pack, more items that, like you got to move around and think about. I would rather do that. And the other thing is too, let's understand the fees. Let's make sure we're clear on this. Amazon charges, in general, let's say a 15% referral fee. So it doesn't matter if it's a $25 item or it's a $100 item, you're going to pay that 15%. I know some categories are a little different. Let's just say it's 15%. But the fulfillment fee is generally a fixed amount. Obviously, it changes depending on the size of the item and the weight and, some things, if it's hazmat or whatnot. But the fact is, it's pretty much a fixed fee. So if it's a box that's worth $50, a box that's worth $20, or a box that's worth $100, it's still a box, and the guy's got to pick up that box and put it in. So you have to pay that fulfillment fee. I find that people, like, cheaper items will tank faster, people start undercutting because I'm going to stereotype this, but I think that a lot of newer sellers like to buy these cheaper items that they see on sale at the major retailers like Walmart or whatever that, $10, $15. And then when they get them in, they start undercutting by a penny or whatnot to try to get the buy box because they're not getting it, or they're still really new and they're not getting as much as they want, and they want those things to sell quickly. So they get impatient, and then it tends to, tank this stuff. The other problem with the lower price ones is if the prices do go down, then your margin quickly evaporates. And then if you don't have that margin, then what's the point of doing it? Also, prepping an item, let's say it's a $25 item or a $100 item, probably takes very similar amounts of time. If you print out a label, add it to your shipping plan, and you take this one skip hop whatever toy and slap a label on that, or I took a $100 toy and I slapped a label on it. Pretty similar, right? Same amount of time and effort. So what I always suggest, sell more expensive items. So in this example, as you can see, same referral fee, the 15%. This fulfillment fee was a little bit higher, but as a percentage, that fulfillment fee becomes smaller. So if your percentage fees, let's say, on a smaller item were 30%, as you start to sell more expensive items, that overall will start to come down. There's usually less competition because people don't like to buy the more expensive items for resale. And if everything else holds true and you're getting the same margins, you've also got more room for price adjustments. So, if you take it down, like taking an item down $1 on a $20 item is way more than taking an item down $1 on a $100 item, right? So if, you start getting in that nickel and diming and people are lowering it by a penny, well, I got more pennies at $100 than I got at $20, right? So there's more room for that. And there's also room for like the seasonal fulfillment fee or fuel surcharge or whatever else Amazon's going to do. Amazon never lowers their fees. They always keep going up. So having more margin, more absolute dollar margin there to absorb some of those changes, right? The return fees. Oh yeah, this is the other thing too. So returns, you're always going to get returns. If I get a $20 item or $10 item, like it was customer damage and I got to open a case with Amazon and go through it, you're less motivated and, you're more apt to just say, forget it if it's a $10 item. But if you get a $100 item returned, then you're more apt to try to go after that and get reimbursed, right? That $100 item is more important because it's more significant. It's a higher dollar value. And if it's $100 versus like, could you imagine having to get reimbursed for like 10 small, $10 items, like pain in the butt, right? So if everything is kind of staying the same, you're making the same margins, all that jazz, sell more expensive items. Okay. Number 3, outsourcing too early. Yeah, that is a weird thing. Sorry, this is jumping around. I was playing with my new presentation here, and now it is annoying. I'll go quickly on this one. People want to outsource way too fast. Everybody's like, okay, great. I opened my account. Now, can I hire a VA to do all the product research and find stuff to buy? And, they're chasing that passive income. You need to understand the business and get in the weeds first, before you jump and hire a VA. Like I have a VA. She only works for me for 3 hours a day. She does some sourcing and other tasks, but, like I've been at it a while and I know what she does. People just are so quick to try to get a virtual assistant and just want to outsource everything. But you need to make those buying decisions. You need to know what it's like to prep and how long it takes and the costs and, items more likely to get damaged and things like that. You need to look at that and spend the time doing it and do it yourself before you start outsourcing. Okay. Sorry, that was a crazy image. This is how you do it. This is what I suggest. And this is how I've done it. And I suggest other people outsource in stages. Okay. First of all, no one's going to care more about your business than you. All this, hire a good manager, all that crap. No, no, no. Only you care the most about your business and a conversation. Okay. So always remember that. No prep center, no person you hire, no other family member, only you. So with that being said, you need to understand what it takes to do things, how you would want things done, how you expect them to be done, like your expectation of quality. And you know that you're never going to get that when you outsource it to somebody. I mean, my prep is let's say my prep is at 100% and I outsource it to somebody else. Hopefully they do 80% of what I normally do and the amount of quality and attention to detail and, what I would put into it. Well, okay, that's fine. You got to accept that, but no one's going to be at 100% of what you do, right? Because no one's going to care as much. But it's also about measuring people and understanding, how long it should take to do things. So what I suggest first is little menial tasks. So working my account, like and I've talked about in other videos, I talk about these guys all the time, seller investigators, and I'll put a link below. So you can get it. They'll go into your account, they'll run reports, and they'll open cases and get you reimbursed for missing shipments, for stuff that didn't get back to the warehouse damage, all that jazz, things that happen inside your account. They'll look after that. That's a simple thing because I don't want to dig into the weeds and analyze a bunch of reports and figure out that some customer that, didn't return his Lego set that he already got refunded for as soon as he issued the refund. As soon as he initiated the refund, money came out of my account. He got his money back, but I didn't get my product. I want them to open the cases with Amazon and fight for them and get it back. That's the first one to outsource. The next one to outsource to me is the prep. Once you understand how it works, what type of labels, are you putting FSN SKUs on? How are you printing them out? How are you packing and boxing? Once you understand that, then that's an easy opportunity to start getting friends and family to help do prep for you. You pay them, maybe by an item. This service cost, I pulled this from a prep center just to give you some idea of, like labeling and things like that. But I mean, I know clients and friends that, they'll say, hey, I'll get my mom to do it. I'll get my brother to do it. I'll get my teenage kids to do it. And they'll do the prep. And I'll pay them a dollar an item or $1.50. And it's great for someone who's looking to make extra money because they can do it on their own time. You're like, hey, how about I'll just get stuff mailed to your house? You unbox it, you create the shipments. I mean, a little bit of training, obviously, and some equipment to get started up. But think about it. Okay, so stuff comes to my house. I package it up, throw it out for UPS, and you just pay me. And so maybe that's my side hustle at night when I come home from my job. I can make some extra cash, prep it for you. Super easy, right? Then the next stage is, to me, the virtual assistant. As you start getting bigger and you need deleted listings and you want them, and you're starting to develop a flair or, your own strategy for sourcing, then maybe that's stuff that you can document and pass on to them to do. But that's kind of the next evolution. Because remember, as you start to add these in, these all cost money, right? Like at the start, I know nobody has as much time as they want, but you should have more time than you have money. But then as you start to grow, you want to start buying that time back. So that's when you start outsourcing, but you have to pay. If you're starting early and you only got a couple $1,000s, well, you don't want to be outsourcing to a virtual assistant, paying for product prep and all that jazz. No, do it yourself, right? As you start to build that bankroll up and that inventory. So I'd say the virtual assistant, then a bookkeeper. Then your business is now starting to grow. You've got large purchases going back and forth, lots of transactions. Hopefully you're on QuickBooks Online, maybe using Taxomate to, record your sales correctly. Then you're getting a bookkeeper. Okay. But as each of these things, and then you can go get an office or, warehouse or whatever, but each of these things costs money. So you need to make sure that you have the monthly profits available to do this. Don't start making these jumps first and hiring a VA when you don't really know what you're going to get the VA to do and you're not fully optimizing them and taking ownership, because everybody requires supervision. So you just can't hire a VA and be like, okay, go do stuff. You need to tell them what stuff to do. Okay. This is a terrible one. Not setting up sales taxes correctly. And this is a big one in Canada. Okay. So pay attention. Even if you got to go back a couple times on this is really good, really key. If you're not sure, grab my free course below. I put some more detail in that, but Amazon.com and Amazon.ca both have marketplace tax collectors. So what does that mean? Amazon will charge the sales taxes for when that customer orders it. Whether it's in the States, and they ship it to Florida, they'll charge the Florida sales tax. If it's in Canada, they ship it to Ontario, they'll charge the HST for them, right? Sales taxes are charged based on the ship to location of the customer. Okay. So the nice thing is Amazon will take care of all of that. Now, you obviously have a base state or province that you most likely need to register to collect sales tax. Check with your state what those thresholds are. And in Canada, there's different the provinces. Some of them have standalone provincial. If not, there's the federal tax, which is DST, and some provinces have HST, which is the GST federal amount, and the PST combined into one. They call it HST. I've got other videos I recommend registering for GST, HST right away when you're in Canada, because it works a little different in the States. So in Canada, when you spend GST or HST, you pay for it on your purchases. But if you're registered, you can claim that back against the GST that you collect on the sales. Okay. In the States, usually you get a reseller certificate. You show that at certain stores and they won't charge you the sales tax if they charge that. Or maybe you're in a state or using a prep center where you're shipping it to a state like New Hampshire that doesn't have a retail sales tax. So you don't even have to worry about it. But regardless, make sure that you understand the sales tax obligations of your state or province and that you register correctly and that you have it set up correctly in Amazon. And this is a big problem, is that, and it's terrible because when you look at a SKU, sometimes it'll have this product tax code, AGEN no tax, and that looks like it's a default, but sometimes it's just there as like the first one, so you could type in, which I don't like. When you like fill out a form and it says, oh, put in your email here, and it says email address, it's kind of like showing you where to type it in. So this isn't necessarily what is there, but it's what's showing you, and it's not correct for most things. So make sure that you set it up correctly. And I've got some PDFs, especially for Canada. But then you need to understand there's kind of two things. So first, you put in your GST registration number in your setup. Okay. Now Amazon will collect that tax on your behalf, but also give it to you in your disbursements. If you don't do that, Amazon's going to collect it still for the customer, but they're going to remit it on your behalf. The problem is, as soon as you register for GST, it's your obligation to collect it and remit it. And if you screw that up, it's not like you can go to Amazon and say, hey, can you give me the last, 12 months worth of GST you collected? Like, right, sure. And then adjust your GST return with CRA. Like, it's not going to happen. So I've had multiple conversations with CRA about this because clients do get into trouble. They don't set it up correctly. So first, you got to make sure you put your GST number in. Then you also got to make sure that you have what I call like the default product tax code. And you want to set it to AGEN tax because most things are taxable. So if there's not a tax code set at a SKU level, then by setting the default tax code, we'll kind of override that. So like in some provinces and some states, there's a few things that wouldn't charge a regular sales tax on, but pretty much everything else does. So if there's no specific sales tax code set up in that SKU, then the overriding will be the default one. And people will set up AGEN no tax. So that means no tax gets charged, which is a problem. Or they mess up, especially like private label sellers will put AGEN no tax at the SKU level and then save that. And then that's set up wrong. So then this doesn't necessarily override that. So you see how you can get into problems with it. So once you've set it up, you need to make sure as the sales come, the correct sales taxes are being charged and you actually get it in your money, right? You actually in your disbursements. The good news is most of the states, like in the US, they take care of all that. You probably just need to register in the one state that you're based in, where you've got your operations. In Canada, it's pretty similar, but in Canada, there's more room for error because you're registering for the GST, HST, which is a federal, which applies to every single province to some degree. So it impacts all of your sales if you mess it up. Okay. Marginal purchases. Yeah, we all do these. Sometimes you're not in the mood, nothing's coming up, you're not really seeing it. Maybe you have a helper and you need to make sure that you're continuing to purchase stuff so that they have stuff to do. You're looking at it like, well, if the price goes back up to, where I saw it 90 days ago, we could make some money at it. If Amazon doesn't come back in stock, maybe the season's ending, but if I held it till next season, there's really good cash back. So if, there's a discount and it's a marginal purchase at like 30%, but if I'm getting 10% cash back, well, then that's 40, like trying to justify, I don't like that. Personally, I don't use the cashback. I use the cashback as a bonus. I don't use it to justify items that I need to buy, right? Like if I see something, I'm like, well, it's a 30% discount. That's not enough, but I get 10% cash back. So I can say, well, that's really 40%. So I'll make the buy. No, I don't do that because what if that click doesn't happen? What if all of a sudden your cashback count gets banned? I don't want to count on that. I use that as a bonus. I use that as motivation to find something like Joe's New Balance outlet. All of a sudden he's got 10% cash back. Well, maybe I'm going to go have a look at Joe's New Balance outlet today, just, and see if I can find some stuff to buy that meets my criteria and I like. And as an added bonus, I'm going to get a bunch of cash back, right? That's how I use it. And if it doesn't hit, man, that really sucks. They don't record my transaction, but it's not breaking my business. I'm now not unprofitable. I just didn't get that extra gravy on it. You know what I mean? So yeah, never assume you're going to get cash back or points. Treat it as a bonus. If you want to take some of these marginal like purchases or holds, sometimes I see people like buying out of season. right? Like they're buying the Halloween costumes in November to hold until next Halloween. Yes, I know they're $10 and they sell for 90, but is that a deep enough discount? What else could you do with your capital for the rest of the year? Could you have turned that, money over 3 or 4 times? But if you're getting 6 times or 7 times, if you held it for that costume, okay, what do you want to do? What makes more sense? So balance that out. Same thing, like you don't want too much of those long-term holds because then cash flow is going to get real tight. Like we go back to the start. Okay, that's going to be profitable, but it's super seasonal. So do I want to hold sandals until, March, April next year? April, May? I don't know. I mean, I know people go on vacation, but obviously it's still a seasonal play. It needs to make sense as far as what is the opportunity cost of that money? What else could you have done with it? How many times could you have flipped over the inventory versus holding it? And one thing I always say, I'm like, there's always more to buy and something else to buy. So you don't need to go super deep. You all the time. I know I like going super deep at times because it's easy and you find something great and it's like a poker, you're getting all your chips in. But there's always something else. There's always another opportunity. There's always something else to spend your capital on, right? Don't worry about it. And sometimes you got to reprice it and you got to liquidate old inventory. You got to take the loss or you got to lower it and just move it, get your money back and move on to the next item. But try to avoid forcing some of those purchases. Okay. Chasing the old shiny objects. It's what all entrepreneurs love to do, or a lot of us do. And yeah, we do. I mean, here's a bunch of like merch on demand. I mean, how many people went and got a merch account and made a bunch of t-shirt designs and sold like 4, right? Bundles, store specific replens. You go to Trader Joe's and you're like, okay, what are the Trader Joe items I can sell? Or what are the Costco brand items I can sell? Okay, those are the ones. What can I sell? It's only available in Canada at Costco and not available in the States. I get it. Private label items, people get really riled up and like, oh, I'm going to start private label. Got a little bit of success and now I'm going to order direct from China and I'm going to create my own. Like it's a whole nother ball of wax. Okay? So what I say is test new things. I'm all about that. Sure. I have Amazon influencers too. That's another one. But regardless, I'm about taking small risks, testing new things, not going too deep. But I'm not talking about testing entirely new business models. I'm talking about testing like a new category. Like there's so much to buy on Amazon, in resell. Like just, okay, maybe I always buy toys. Well, let's look at some shoes and maybe I'll check out some grocery items, or I'm already good at grocery. These are my main, I do a lot of spices and coffee. Well, maybe have a look at mixes or something or candy or maybe seasonal candy, or, you're taking new things, you're testing. If it doesn't work, you've taken a small risk. Who cares? It's, a couple $100. If it does work, you've opened up another avenue and you expanded your business. But, sometimes you just got to not get too wild and too crazy. Just stay in your lane. Remember what works, focus on that, and take small calculated risks to try to expand your portfolio of items to sell. Overthinking your purchases. It's funny. We've had some conversations in our masterclass about this, but I would say like the analysis paralysis. Like I could look at a listing and we can come up with probably 5 or 6 different reasons why you shouldn't buy it and 5 or 6 reasons why you should. We all go through it. Like, oh, what if I buy it and I get regated? And the reviews say it fits smaller and this guy didn't like it. And, is the sales rank too high? Like, what if Santiago's an early riser? That's a joke from A Few Good Men. You just never know, right? So that's what I say. Take small risks, test, review. Like if it doesn't work out, okay. It's not a big loss. Just try it. And maybe that purchase didn't work out, but it leads you to find something else, or it leads you to reevaluate and look at that category again and find something different. What if you do nothing? You're not going to lose any money, but you're not going to make any money either. And you're not going to get that momentum going, and you're not going to keep building that inventory with your profits and reinvesting them and, building up your business. So if you overthink too much and you're too afraid to pull the trigger, like sometimes you just got to pull the trigger and try it. Just make sure it's not financially crippling, but just buy a couple items, especially if you're new. Just pulling the trigger and buying a few items and seeing them sell gives you loads of confidence. Too much software. There is so many things, and I know the last thing we need is another monthly recurring payment for software. I know, but software can be very good and very helpful. These are the ones I like. You can spend it on a ton of other things too. And I know there's all kinds of other stuff and hazmat reviews and cashback, whatever. This is the order. You're brand new. You want Keepa. Okay. And you want the paid ones, you get the sales ranks. Then you want seller board. This is in my opinion. You want seller board because you want to know, am I making money when I sell something? So important. If you're not, you can adjust. If you are, great. That's deep insight that you need. Next one, QuickBooks. You still need to have tax accounting for CRA or the IRS or wherever you are. You need to have financial records. AZ Insight. This is that little box here. It's a plugin. I'll put a link below. This just is a Chrome plugin. It makes my life so much easier. I've got so much data just at my fingertips. I don't have to go far. That's just an easy, I can source so much quicker and I can, evaluate a lot of data so much easier. It's a nice to have. It's a really, really nice to have. But if you're brand new, Keepa is the must have. Sellerboard's a must have. QuickBooks is nice to have. The AZ Insight's nice to have. Then the next evolution is a repricer. So Profit Protector Pro is one that I like. That's kind of with those, you're good. People get tactical arbitrage and some other plugins and stuff. Yeah, fine, great, you can. But these are kind of like just stick to it because every time you add another one on, it costs you more money, more monthly. These ones are all pretty affordable, very small monthly payments, or you buy it yearly on a super good rate. They're nothing crazy like 150 a month or any of that jazz, because you can get some super duper expensive stuff. So keep an eye on that. Don't blow all your money on software. Okay. And number 9, you got to enjoy it. This is another psychological thing. Yet a lot of business owners are like, all I keep doing, I'm so broke. I have no cash flow. It's a struggle to pay the credit cards. Yeah, credit card points are great, but sometimes you got to slow your growth. You've got to make sure that the cash coming from the sales are happening. You're getting the cash flow coming back based on what you're actually spending, and you're covering those off. And then you're starting to enjoy it. You're actually, enjoying some of the profits. I've got a link here. Profit First is a book that a number of my clients use. The whole thing there is basically when you get a payment, you allocate amounts to cover your business expense, to cover your taxes, to pay yourself a percentage, and then what's left over, you would invest back in the business and new purchases. So it forces yourself to take some of the profits. And I totally agree. Like, I get it. We're all in the work hard, hustle, let's grow this business. Maybe you do that for a year, 6 months, a year, 2 years, 3 years, but it comes to a point where, you know what, maybe you don't need to go and you don't need to sell $1 million worth of stuff. You only need to sell $500,000 and still make a good percentage, handle less items, and make enough money to, make it worthwhile. But if you're not doing that and you're struggling with the cash flow and then you're getting angry and you're getting frustrated with Amazon and, all that jazz, you need to take a step back and say, okay, maybe I don't need to grow this fast. Maybe I don't need to be launching new products. Maybe I don't need to go into this category. Maybe I don't need to order this brand new wholesale account and spend $10,000 there. And, it's okay to take a breather, enjoy yourself a bit, pay yourself some money. That's why usually January is, well, returnuary, but January, usually you should have a good amount of money coming off of Q4. And yeah, take some of that and, pay for a vacation, buy something new, enjoy the fruits of the business. So all that aside, you still got to actually enjoy it. And if you don't, you got to figure out why, and you got to reap the benefits. The whole point, hopefully, the reason why you started this Amazon business was to make some money, to expand your freedom. Maybe you want to travel more. Maybe you want to live in a different country like I do, but you got to do it. You got to get to it at some point. Okay. So there's 9 common mistakes. Hopefully that helps you out. There's a lot more, I'm sure, but these are some things that I see that are pretty common and hopefully, serves as some good advice. Again, subscribe to the channel, like the video, grab some of the links below on the items that I talked about, but just, go back, check out some of these things that I said before, especially around the software about your profits and the GST, HST setup. If you're Canadian, those are so key. I've got more detail in my free course below, but just make sure that you understand your business and your money and you've set up your sales taxes, that's half the battle. So hopefully this video helps. See you guys in the next.